Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi everyone, welcome to the Small Cap Discoveries conference call. Today on our call, we have Dan Matlow, the CEO of Vitalhub, back to give us an update on the company. Vitalhub trades on the TSX Venture Exchange under the symbol VHI and in the US under VHI-BF. The company is trading at $2.95 with roughly 36 million shares outstanding, or about $107 million market cap. I'd now like to hand it over to Paul Andriola.
Thank you, Trevor. Yeah, great to have Dan back with us. Dan, you were last on October 22nd last year. The company's progressed a fair bit since then, so we're glad to have you here to sort of update us. And why don't we just jump into it? How's business and what's new since we last spoke? And mind you, before that, why don't we just give some of our listeners sort of a quick summary of what exactly Vitalhub does.
Yeah, so Vitalhub is a Canadian-based healthcare IT software vendor that has expanded beyond Canada on an international scale. So we are 100% software organizations that's involved in selling two primary areas. One is what we call community mental health agency and hospital services based applications, so electronic health records for mental health patients with larger community agency-based worlds. And the real area where we expand to is what we call into our patient flow area, which would encompass our patient journey software, which are solutions that help patients navigate through the healthcare system, primarily going into a hospital-based area. So tools that are used by patients, either on a mobile device or computers, to help them navigate through the healthcare system. And the other one would be, analytic solutions that help hospitals primarily deal with in regional groups to deal with patient capacity and overuse of hospitals, and analytics and artificial intelligence solutions that help them deal in those two areas. So we're focused on those areas. We've grown primarily through M&A. We've done 8 transactions to date, but we're also heavily focused on organic growth, and that's really where the biggest updates have happened. The company has done extremely well during some of the COVID stuff and expanding our organic growth sector, primarily in our patient flow, our patient journey, and those solutions.
Fantastic. You know what? The numbers really stood out for me. You guys had a strong year, but more predominantly a really strong Q4. Overall, it looks like on a year-over-year basis, you guys grew by 35%. Maybe give us a breakdown of where the growth is coming from, how you guys are doing with M&A, and yeah, more specifically on your organic growth.
Yeah, so we've been focusing our M&A on the international markets, primarily in the UK markets, have been our primary area that we've been focusing on. We did 2 acquisitions, and just before we went on board, I think it would have been the end of Q4, with a company called Transforming Systems, which and another company called In Touch with Health in the UK, and both of those have been performing extremely well in those marketplaces. So Transforming Systems has an analytics platform that allows regions of hospitals and groups get analytics on how they're all performing, and In Touch with Health has those patient journey solutions, which help patients virtually before they come into a hospital setting to deal with things. So in the virtual world, so things like pre-operative based assessments prior to coming in for elective surgery, as well as so they can do all the forms and all the clinical assessments before they come there, as well as mobile devices that will start communicating with you before you come in for a service and navigate you right through the hospital when you come into the hospital. So you can imagine with COVID, those have really been a high profile area, and both of those have grown pretty nicely. So from a numbers perspective, we look at something called annual contract value or recurring revenue, which would be the portion of software revenue as a portion of our business. So the company is, I think, we're approaching about a $20 to $22 million run rate. So we did $5 million in Q4, 5.1. So annualize that as 20.5 million. We think we're growing pretty nicely on that aspect, but we're getting to the 75% of that being software as a recurring revenue, which is true SaaS-based, recurring-based level. So our contract value at the end of Q3, so going into September of last year, was $30 million of annual contract value. That was the recurring nature of our software. But at the end of Q4, we added another 1.3 million of that. So we're well above 14.8 million of recurring revenue as we head into 2021. And we're seeing that momentum continue through Q1. So we're the biggest message we're trying to get to our current investors or to other investors looking at us is we're growing organically our software business pretty nicely right now.
And so I mentioned a fair bit of that organic growth really is that cross-selling that you guys were talking about in our first sale. Maybe talk a little bit more about the opportunities for cross-selling.
Yeah, we buy software solutions, we buy customers and contracts. So we all ideally look to cross-sell within our base with similar type of solutions. So we're seeing cross-base of the transforming system in the recent quarter. We've moved into the Canadian marketplace. The Oculus system, we're moving into the UK marketplace, into those customer bases. We're seeing some deals in the Mideast where we're introducing the transforming systems into the InTouch base because we have a couple implementations in the Mideast on that. So we are doing a pretty effective job in our account management stuff as well in getting new deals. So we can cross-sell amongst different companies or different organizations. We also have, I think, in our patient flow area, we have about 40 different modules that we can offer. So we can upsell our existing customers base with new modules pretty effectively. So that's a big part of what our business is about.
Why don't we get the COVID question out of the way? We're a year into COVID. You guys operate in Canada, but you also operate internationally. How are you now dealing with the COVID issue, and how's that changed your business going forward?
Yeah, as a healthcare software vendor, we focus on it in a couple of different ways. So internally, we're all working from home. We're doing everything remotely, and we're a pure software company, and we've handled that pretty good. Our biggest concern when we did this was how would we deal with our Sri Lankan offshore development group, because 1/3 of our staff is an offshore development group, so cost reduction is a big part of our investment thesis on a go-forward basis. But they're all working from home nicely. From an opportunity perspective, some of our solutions have slowed up, but many in the patient flow, patient journey have increased. So the awareness factor of how we can do things remotely to communicate with patients has been highlighted, and we expect that trend to continue. We're starting to see resources and money go into that area. So purchases, Synopsis, which is part of our patient flow journey, Baseword has probably done the best stuff for this. It's a preoperative based, assessment based solution. So before patients would have to go into a hospital before elective surgery, we want to reduce that as much as possible by communicating and doing that preoperative assessment from home. So something called Synopsis at Home is something directly related to COVID that's done pretty well. Transforming systems that looks at bed capacity from regional health authorities has done pretty well in terms of adding COVID-based data, so those organizations can see how COVID has been affected bed capacity, bed utilization. We all know what's going on in Canada right now and stuff with COVID. ICUs are filling, beds are filling up, and we provide all those analytics to hospitals that help them effectively understand how those analytics are performing and what bed capacities are. So we've seen some upsurge from COVID into our business in those two areas for sure.
Now, I also noticed you have you've managed to get a substantial amount of new licensing deals. Maybe you talk to some of the deals you've announced in the last little while.
Yeah, mostly, we did some pretty large deals in the UK. They call them trusts in the UK, not hospitals, and it's groups of hospitals together or agencies at these larger based organizations. But we've done some larger Synopsis deals. It's not uncommon for us to do 100,000 pound recurring deals, 170,000 recurring deals. So, and we had about 4 or something of that would happen last quarter, that got us to the 1.3 million range. So, we have done a fair amount of transactions. I think we probably did about 14, 15 transactions in Q4 that would have made up that particular area. We press released some of them. Kings is one of the largest deal that we did. It's I think could be the 3rd largest trust in the UK. To put that in example, it's about a 3,000 bed facility. For those that live in Toronto, Canada, UHN or Toronto General, which would be our largest hospital in Toronto, would be a 1,000 bed facility. So, just to put things into perspective of some of the size of the organizations that have taken trust in what it is. We have a very large implementation of a product called MCAP in Qatar with a hospital chain called Hamad Medical, which would be the biggest medical unit in the Mideast, in the Emirate, in Qatar. So, we have some pretty high profile names of some customers that are really ratifying what we do, we think, on a go forward basis.
How long are those contracts usually?
Contracts are usually 5 years in total. Maybe they could have an opportunity to cancel after 3 or 4 if they negotiate that. But the change management's a pretty big thing in these large organizations. So they're pretty sticky based applications once you get them implemented. So those are typically the terms that we would do.
Gotcha.
Yeah, our annual recurring number that we quote our stuff only encapsulates 1 year of that 5-year contract. So it's annual in nature. It's not the whole 5 years.
Right. And what's your, refresh memory, I think you mentioned it, what's your sort of recurring revenue level right now?
Yeah, so we did 5 million in recognized, 5.1 million of recognized revenue in Q4, but our annual recurring contract value is 14.8. So, on a $22 million run rate, 21, 22, we have close to 15 million already in the bank. We're also sitting in a pretty strong balance sheet. We got about 27 million in cash on hand, no debt on the balance sheet, and that money's all earmarked for acquisitions, and we're expecting to do some more of those in the next little while. So we're producing adjusted EBITDA positive. We use the word adjusted EBITDA in there because of all the acquisitions. We have a pretty big amortization, goodwill numbers on our intangible number that we amortize. We show that expense and depreciation and all those taken down. So trying to get to profitability is the difficult thing. So adjusted EBITDA really maps cash flow pretty accurately from what we're doing. In Q4, I think we close to 800,000 of adjusted EBITDA came through the works, and we're still adding more recurring revenue and more acquisitions in play. And we're always looking for cost rationalization as best as we can, especially on the technology side using our offshore development group. So we look at all those angles of the business model.
Okay. At this point, I'm going to remind everybody that's listening, if you've got any questions you want me to ask Dan, please use the chat function and I'll do my best to ask. Back to the M&A side of things, typically what do you look for in an M&A target? What sort of metrics or where does it fit, sort of tech-wise or relationship-wise? What can you tell us?
We got about 400 companies on our radar screen. 100 that are really in our sweet spot, which would be in the patient flow journey analytics space. Usually, we're looking all through Europe and the Mideast, Australia, and of course Canada. Not that much in the U.S. Because we think there's a good pocket of a niche away from that. It's a different landscape there. So we're looking on that in niche products that would be synergistic to what we do. And we're always looking for recurring revenue as the primary motive. It better have 60% recurring, or we're not really interested, or we want to be able to grow it to the 60% pretty quickly. There tend to be break-even owner-operated businesses that may be losing a little bit or making a little bit of money, so taking it out. So we look for cost reductions and the ability to grow those assets pretty effectively, and our track record would suggest that we're doing that with it. So recurring, they tend to be owner-operated businesses. We look for a payback by producing cash flow over about a 5 to 6 year period. from it. So that's what we look at from that perspective.
And geographically, is there any spots that are more appealing than others?
We like UK and Europe, a fair bit. Well, I think you'll see more activity. Of course, we're looking in Canada. Canada's a much more difficult, what I call, it's not that fertile for software companies. It's UK is 3.5 times the size. Canada is very fragmented in terms of its provincial-based jurisdictions, which creates roadblocks for going across multiple geographies. So it's very difficult with the size of our markets to get what I would call the size and depth of software companies that would do that. Although, there are companies, and we will continue to look in those spaces for niche type of solutions to do it. But Europe and UK are a little more appealing. The currencies a lot more attractive. It's more attractive in terms of offshoring our cost base and our technology costs into our Sri Lankan base just based on the currency exchange. There's a lot of pros in those marketplaces that we like. And
as investors, this is a question you probably get a fair bit, but what other catalysts do you foresee over sort of the next 6 to 12 months?
Yeah, the elevator pitch is, you got a pretty experienced group here that's done it both from a board perspective and management team. So we've all been around here. We really look at 3 areas in how we can make investors money. Number one is just on the acquisitions. So, if we can buy things, and we tend to be paying about 2.5 times revenue to maybe 3 times recurring revenue. So you got to make, we want to make money on the arbitrage of the acquisition. So we want to make smart acquisitions that are creative and doing things very good. So there's money to be made there. So you need to look at the acquisitions and what they mean to us. The second area where we think is high margin or organic growth of software. So how do we increase ARR? So, if we keep going at this rate between 700,000 and 1.3 million per quarter, that's all your 75 to 80% high gross margin based software solutions. That should produce EBITDA to the bottom line. So, we're looking to make money that way as well. And then finally, your biggest cost base and technology base is your technology costs. And with the high cost of software development and things that are floating around, if we can move some of those costs offshore and get cost reductions for those effective solutions, we're going to do that, right? So all 3 of those are what drive our daily decisions. So we're constantly on the M&A front. We're looking to sell those assets that we have that are can be sold organically without spending a ton to sell them. That we can do things as effectively as possible, and we're constantly trying to figure out how we can optimize our operations as effectively as we can.
And since we last talked, I'm not aware if you guys, if you got any analyst coverage. Is there anything that's sort of changed on the other side?
There's 5 analysts that cover us. Comark, 8 Capital, Canaccord, Paradigm, and Beacon. I got them all. It's good. I think the range is between 4 and 525 are the target prices from all those analysts that are covering us. I think the stock closed at 295 today. To do that, if you look at the market cap relative to our organic growth and our recurring, we still think there's lots of room for growth in the share price, at least from our perspective of when you look at the comps in Canada and the US. Compared to the other healthcare IT stocks that are in the marketplace, we are 100% software. We haven't tucked in any brick and mortar clinics into those world and try to get recurring numbers, which have seemed to be a phenomena that people have gone through. We're hitting the cylinders on the organic growth and on the software as a business. We'll always only be 100% software business. We do some implementations of services, but we like to be compared to technology companies more so than a lot of the healthcare. I'm going to call them IT companies, but they're not 100% IT. They've really tucked in some clinics and other stuff and surrounded it together, which is really a phenomenon. We've only seen it in Canada. I haven't seen it anywhere else. But we like to highlight that to the investors that our market cap relative to a pure software company, we think is still pretty attractive.
Yeah, no, I recognize this as well. I mean, you're truly a sort of a life science tech company, software based, but it's almost like you're getting misjudged because of some of the other players that are out there that sort of muddy the industry. Any intentions of uplisting, ideally to U.S. listing? Are you guys still too small?
Yeah, we're looking at both of those, US and TSX listings as next steps, and we're looking at deploying that 27 million of capital on the M&A front, as quickly as we can here. So that's really what we're trying to get accomplished. We don't want to make mistakes along the way, so we're pretty patient that we're going to do things smartly, but that all those things are starting to come onto the radar screens as we're maturing.
Mm-hmm. And speaking of the 27 million, I mean, do you foresee a need for capital in the next little while, or sort of what you have now enough to?
If you look at that 27 million and what we've been buying companies to, ideally we should be able to turn that 27 million into another 10 million of recurring, right? So, if we're 15 million of recurring now, we can hopefully turn that 27 million through organic growth and through buying in a short period of time to like a 25 million recurring based business, right? So, we're trading at, we're trading at $100 million market cap right now. So if we turn that cash into 25 million of recurring, that's a pretty attractive market cap if we do a good job on raising that money. So that's what we got our focus on right now is the next catalyst is how do we do that, both organic growth and things, but and then theoretically that all should start coming to the bottom line because it's all that high margin based business. So though the analysts see that, they've written it and it's all disclosed in that. The institutions have seen it. We're primarily institutions that are held. And our job today is trying to get into medias like this to get the average retail investor to understand the economics of what we're doing and to really understand what that opportunity reflects here.
Yeah, no, I completely agree. I can see it be a story that resonates a little bit more with the institutional guys, but retail market should start to figure this out as well. Listen, I mean, we've covered most of the things. Unless you think I've missed anything, I'm going to sort of give the floor over to you if you want to leave any sort of key messages or parting messages you want to our listeners. The floor is yours.
No, Paul, I think you did it. I think we're in a good space. We got a big market potential because we've expanded internationally outside of Canada. So our target market is bigger. Our solutions are proven. We've got a great team here, and we think it's a good opportunity. And we're just encouraging investors or potential investors just to keep your eye on us, so sort of understand the story and just get it on the radar screen.
And Dan, if somebody wants more information, how should they get it?
Just reach out, dan.matlow@vitalhub.com, or go onto our website in the investor page. The Vitros Groups is there. They're helping us out on some of our IR type of relationships. So they're there, but you can reach out to me directly at dan.matlow@vitalhub.com. And we always respond to any potential questions, and we're happy to take, from the large institutions like Burgundy, which is our biggest shareholder, right to the smallest ones that have questions. We're always available to answer them.
That's fantastic. Well, listen, congratulations on continuing to grow the business quite nicely. You guys are certainly executing as you said you would when we last spoke. I want to thank you for joining us today. We've been speaking with CEO Dan Matlow of Vitalhub. Dan, we look forward to the next time we can catch up.
Thanks, Paul. Thanks, Trevor. Thanks, everybody.
Thanks, guys.
Bye-bye.